All right, good morning, everyone. Let me get going here. All right. U.S. markets had a huge session on Friday to cap off another great week of pretty much new all-time highs every day. We've just been kind of finding a way to be green every day regardless of news, but obviously for the most part the news has been good, so we've really been just vertical for the last few sessions. So and we're going to continue to keep an eye on that and anything on the horizon that might start to turn that around. It's fourth week in a row that the S&P has made a weekly gain, and obviously just every session is pretty much a new record. So Asian markets followed that up really well. We were up across the board. Even I think you had the yen that showed a little bit of strength in the session. Japan continued to power higher. We saw Australia that traded well. Basic materials and resources traded well in the Australian session, and Asian Pacific Index is possibly going to close at this highest level in almost 5 years. So very bullish. China also overnight came out with home price numbers. We had a rise in 68 of 70 cities in April, and obviously property stocks on the back of that traded incredibly well. So I think that's quite bullish for China, probably bullish for the basic materials today as well. Okay, we have a lot of earnings that were out this morning. We had Barlow's that was out. Headline earnings per share up 31%. That's a beat. That's a beat of Bloomberg expectations and a beat on their previous trading statements. We have earnings of 3 rand 21 cents per share. That's also a beat. They had guided about 3.18 before. Bloomberg expectations were even lower than that. Dividend per share also a beat, 96 versus 92 expected. And then revenue was up 11% at 31.3 billion rand, which was also better than expected, 28.89 expected. We had Able out this morning. Able earnings per share maybe a touch better, down 26%. I think they were expecting slightly, or maybe slightly worse than that, with a 126 1 rand 26 in earnings versus 1 rand 24 expected. Previous expectations, obviously, before the trading statement were up at 159, so that's where that number comes from. Divi per share was a big miss at 25 cents. I know a lot of people were still hoping that they were going to pay out a really high number. That hasn't happened, so I think this hasn't really continued to give any good news. They've said that the bad debt charge expected to remain elevated for at least the rest of the year, which they told us before, I think, and that large write-offs have improved the quality of the remaining NPL portfolio. So I don't think there's anything really significantly new there today. I'd watch that one really closely, though. Some of the people could have been expecting further disappointment, which I really don't think that was. And there's huge short interest out on the stock. So, all right, Vodacom. Headline earnings per share up 23%. I think the expected guidance was between 20 and 25%. They came in at 8 rand 72 per share. Guidance was for 8 rand 69. And Bloomberg expectations prior to that were 8.47. Divi per share came in at 4 rand 30, which may have been a touch light. I know Standard Bank were expecting 4.30, but Bloomberg expectation at 4 rand 50. Revenue up 4.5% at 69.92 billion. Expectation was for higher than that. The ARPU was down 9.4%. Prepaid ARPU was down 16.5%. And then their outlook is targeting low single-digit service revenue and mid to high single-digit EBITDA growth over the next 3 years. This goes with what my theory has been for the last maybe kind of 3 or 4 months. That all of that to finish there is in my mind a shocker. The ARPU and prepaid ARPU is terrible. It's the first time we're starting to get competition coming in for these local cell phone providers. Don't get caught up in saying, this is a great divvy yield. That's a booby trap. I mean, you look at these kind of shares that trade globally. They all trade in mid to high single-digit PE, somewhere between 6 and 7 PEs, and they pay out a 6% divvy yield, and all they are is a bond, essentially. They're totally non-cyclical stocks that are just the ultimate defensive stocks. Like I said, first time we're starting to get competition in here with what's going on with Cell C and the rest of the guys. So be very careful here this morning on earnings. I'll show the chart there in a second, but don't get carried away, looking to buy these things because it's a good divvy yield. All right, and the last one is NTC, earnings per share up 25%. That's a small beat. Earnings per share at 66 cents. They're expecting 65. Dividend per share is a good beat at 27 versus 24, but revenue is a small miss at 13.34 versus 13.94. All right, and then just on the divs today, we've got the JSE that's paying a $2.50 in case you're trading that stock on the day. All right, pretty much no data today. Typical Monday. We had Japanese machine tool orders that were slightly better earlier. We've got industrial orders out of Italy later, and then we've got Chicago Fed National Activity Index later in the States. A very, very light data on the day in the States. We're obviously probably going to be playing catch up early on to the overnight sessions in the U.S. and in Asia. Let's jump into the maps. Sorry, we took a lot of time there, guys, so I'm going to try to jump through this quickly. The first thing I'll show here is spot gold. You can see here we really, on a closing basis, we're right at where we closed. In fact, I'm going to put that down a touch. We're right at where we closed at the bottom of this move lower on the spot gold price. You can see we did rip down, I think, to about 1425 on an intraday basis on that sell-off previously. I think if we can get a close below this level, I think the gold price can really come down significantly from here. Potentially another 120, 130 bucks or so. It would really take us down to around 1,200, which is, I think, where this thing may end in the short term. So watch it today. This is really, really important. If you look at, let's just look quickly at the silver price. You can see that it's, if it's going to give me a silver chart. I don't know why that's not popping up anyway. There we go. So you can see silver. Silver's already really broken support there, and you can see that we're starting to reach those targets quite quickly. And gold obviously looking a little bit more. The bounce up was a lot more vicious, and you can see here it looks like we're about to break, just like silver's breaking. So watch us closely. If gold drops, I think there's more downside to gold. All right, I'm going to show. Come on. I'm going to show oil here real quick. What's really interesting to me is that is how the oil price has been. And physicals have been holding up reasonably well. Precious metals, everything to do with that type of space has been really weak. I say physicals. The precious metal space has been really weak, and the industrial demand has managed to hold up pretty well. I mean, copper has been okay, been a bit weak, but oil has been really strong. And held up really nicely through this onslaught of the resources. This is a really important level in the oil price. I think we can break out above this level in oil. We could continue to see that in some of those share prices, and we'll jump into that in a second. First one I want to show here is Vodacom. And Vodacom, you can see here, has really broken below. We'll draw it from the top of the wicks, but you can see here Vodacom's broke out of resistance on the trend line as of Friday. Today I'm not really enthused about what's going to happen with on the back of those earnings. I don't think they're spectacular, but watch these closely today. it could be some more room to the upside if they hold this level. I just wanted to go with that theme we were just talking about with the physicals, with the precious metals versus the industrial metals, and I just want to show here. I'm going to run through real quick on these, and you can see how the big green bar that we got on Friday out of some of these things, and they kind of turned higher. You saw Kumba break out above recent consolidation. Sorry, that's a really bad line. But recent consolidation, we broke above that in Kumba. You can see the same thing in ARI. Not that we're breaking above consolidation. We've got a huge green bar in ARI on Friday. Billiton's another good green bar. We did get a pullback toward the end. And Anglo, same story. Just goes with the theme that we started to see a turnaround in some of the resource stocks that weren't precious metals on Friday. So watch those really closely today. We could get a little bit of a second day play there. Now I'm going to show Anglo Gold, which the gold price obviously breaking down. We had this massive consolidation, which we pushed below the other day. There was a lower close here at 63. We closed below 63 by closing at 62 on Friday. I think these things have a good, almost 15 rand a downside here. So let's watch these things closely. This could be a nice one to jump on the back of today. All right, SPAR also. I'll show SPAR just falling through its to the bottom end of this little wedge pattern, and could have some more downside here on SPAR. I'll watch that one closely. And the last one I'm just going to show is Admiral Group on the LSE, which is same sort of pattern, breaking down to the bottom of this wedge. I think we're starting to see some of these. We see which stocks are really gonna be able to stay in this prolonged rally versus the stocks that are gonna kind of start to fail and give us pullbacks when we do get a pullback. That's it for today, guys. Thanks a lot.